Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, over the period of last week, we saw the Australian dollar attempt to take on that resistance at 76.65 and failed. Now, from current pattern that holds, and especially from the New York sell-off, the market is now looking towards that 75.95 support. With the technicals in play, supporting a further downside bias, a break of 75.95 would see further scope towards 74.80.90, which you can see here was challenged back in March. And you can see here held very respectively and actually staged a very firm bull trend afterwards from 74.80.90 back to 77 cents. I do expect to see this weakness, as I mentioned, to look towards that region and reassess from there. Any advances should find potential selling or supply from 76.65 with the supply zone above from that 77 handle. Well, with the US dollar strength returning on Friday and quite modestly back towards the end of the week, the euro over the last few days is played into a very bearish bias. And as you can see now, since the break of 107.05, now exposes further weakness towards 105.70. In light of the pattern, we could see further weakness. As you can see here, we're only just coming through to that negative outlook or pattern, and could see further weakness, as I mentioned, near 14-year low of 103.40.70. Any fresh advances should now find resistance from 106.90 to 107.30.40. Well, the dollar yen story, a little bit disappointing considering it did find momentum from the low 110. And at one stage was looking like it was going to challenge that 112.55.65 area. However, from the sell-off on Friday, now looks towards its minor support at 111.30, but towards 110.80.90, I do stress a little bit of caution, as we could see the market rebound from this level and look back towards the top side. Now, the reason behind that is I feel that the US dollar strength can continue, and if you look at the DXY or the dollar index, it is potentially looking to a firmer outlook for this week after ending on a bullish key reversal. This in terms would support a further dollar outcome to challenge that 112 area and maybe onto 113. Well, the pound very mixed after at one stage at the beginning of last week sold off from 126 and fell underneath 125 briefly to 124. And as you can see here, recorded a low of 123.75 before rebounding back towards the top side. Now, we could see a bit of choppiness into this week as the market still tries to slowly take on the messages being sent from the UK in terms of the Article 50. Now, I expect to see eventually the sterling to sell off and look towards that 122.10.20. But we don't quite have that pattern yet to support that challenge. So let's not discount one more challenge towards that 126 handle and then fail him and see a market fall towards that 122.10.20 and reassess from there. Well, the gold pattern, as you can see here, fell away recently from 12.64, rebounds off 11.97.98, now takes on the challenge of 12.64 and fails. In light of the rebound on Friday from 12.38, could see a slight impulse to the upside, but towards 12.58 to 62.4 should find good supply. I do expect to see eventually, if this pattern starts to shape up further, of a further downslide and look towards 38 and lower towards that 12.24 objective. Any advances still sell into strength towards 58 to 64. And to round up with oil, but as you can see here, how bullish divergence works, and it does work very well when you identify it. And the fact is that in October, November, you can see this lower low in price as the indicator was going up here in the MACD, and also a rise in low to a higher low that the market surged up towards the region of around 49, fell back and then rallied hard up towards $55. Now you can see here similar pattern, the market lower lows in price and the indicator going up like we saw back here in the MACD, and also here from the stochastic. And we have, since the lows around $47, rallied back now nearly $4 to $51. We're not too far away from seeing a short-term top around 52.60. Reassess from there as we may get a slight pullback, but I'm not overly convinced that the market will break down, but instead will rally on towards that $55. So still a little bit left in this rally since the bullish divergence, but towards the next 160 points might find a little bit of market taking profit, or even a bit of supply returning. So be a little bit cautious there if you are trading from a long side. So that wraps up my daily video. Thank you very much for joining me. And as always, look out for the intraday report that will be released shortly.